segment quite quickly. Where are interest rates going, Mikey? Tell us right now, are they going higher or lower? Because then we can actually quit this job and make a bunch of money.
Yeah, let me call my friend there, the Fed, and see what they're going to do. It's tough when you're looking at rates, especially after the big movement in 2 years. But then you kind of want to look at the whole picture. Yes, exactly what I'm speaking to here. On an intraday basis, I mean, I don't mind leaning a little short some of these 2 years. It's tough going into the weekend, kind of maybe reestablish on a Monday. But if you're looking at the price movement over the last year, my inclination would to be leaning a little bit short on the over expectations and maybe over hype that we've seen in the 2-year interest rate rally, more so than every cryptocurrency out there. I mean, look at this thing.
Up over 1,000%. And that's not even factoring in that when you buy futures, you put up less capital. So if you bought, we should make a sensationalist article about this. If you bought the 2-year, which we did, but we pitched it out at like $4 or $5. If you bought the 2-year future here at $1 and it would have cost you I think the margins when we were down at $1 or $2 were like
$70,
$50. Yeah, $70, $50. You now would have returned on that more than $1,000.
The interest rate millionaires buying Lamborghinis, living on the Bahamas.
No one's talking about them as much as Dogecoin and everything else. But you raise a great point. While interest rates are the highest they've been since 2019, we're right actually smack dab in the middle of where we've been. Rates have been as high as 3% in the last decade. And what's also a little bit interesting and potentially off-putting for anybody who's just flat out short a bunch of these is we fell right from 1.5 to 0 like that. And we've recently risen from 0 to 1.5 like that, and not spent a lot of time in here. Now, this could be different. We could get up here to 1.5%, fall back down to 1.25%, rise to 1.6 and kind of play back and forth. But there is, this idea of obviously this is the pandemic breaking out, Mikey. When times are bad, short-term rates go immediately to 0. And then when times are good, but I guess by good in quotes, I'm saying inflation kind of comes out of nowhere and smacks you really quick. These rates have to move back up to a more normal environment as quick as possible. And the interesting thing here as well, in terms of where our rates going, is that the projections there in the 2-year yield actually don't even do service necessarily to where markets are expecting the Fed to have short-term rates by 2023 and beyond. You can see here the bulk of projections actually north of 2% in short-term yields. So this could get back to that 2 to 3% like we saw in 2018 here, Mikey. This could be essentially just the halfway point to those prior heights.
Yeah, it's one of the quiddities of interest rate markets is that they can fall and rise as quickly as they do. I mean, it's not as common in the stock market. I wouldn't say. Maybe over the last year, there's been an exception where stocks have climbed as fast as they've fallen. But it's nice to see this disagreement among market participants on where rates are going to be. Because if you had looked at this same Fed projection chart 2 years ago, everybody would have expecting rates to be 0 still, right? And now there's actually some disagreement, which is going to present some really neat trading opportunity for the short-term trader.
That's a great point, because I don't want people to take all this information. I just want to try to paint both sides of it and get everybody out there as much information as it lays right now as I can. But Mikey's exactly right that these projections are 3% by 2023 until they're not. These projections going out 12 months and beyond for the last 3 or 4 years, we're at 0%. Almost, it was 99.5% hovered at 0 for the last several months. And when that switch flips, it flips. And so these projections are as they lie right now. But that's not to say that, that's projected for 2023, Mikey. So this 2-year is definitely going to 3%. No, this stuff changes like that. If something happens or the Fed just comes out and says, yeah, we're worried about inflation, we're not that worried about it, those projections will come in, or something happens to our economy that calls for inflation too slow and there actually to be fear in the market, these projections and everything will come in. So it does create, I think, a really intriguing story and a great point for people to put their ideas on the line, thankfully in a small fashion. S2I, just a $200 margin product. Do we get there or not becomes the trade of like, I can sell this if I don't think we get to that 3% projection. I can buy it if I think, yeah, we're going to get there in the next couple of years. It's a pretty clean trade there, Mike.